I look really.
Hey guys, we are here with Ashley McKenzie Sharpe, and we're going to chat all about DSCR loans. This is Karie Carrico with Karie Carrico Real Estate. I'm so happy you guys are on here watching today. This should be a fun and great conversation. Um, Learning about DSCR loans and bank statement loans it's just an amazing topic that to talk about because it like opens up so many windows for people to buy homes if you're self-employed or an investor or whatever. But Ashley, thank you so much for being here today.
Absolutely. Thanks for having me.
Yeah. So before we get started, what fun stuff are you up to?
Let's see. I just got back from a little trip to California. That was nice. It was cooler.
Yeah, where'd you
And
go?
went out to Scotts Valley
Okay. Yeah.
um, and hiked and whatnot. So that was nice.
Yeah.
And then, I don't know, hanging with Birkin this weekend and then going to
Yeah.
head to Dallas.
Very cool. Very cool. Yeah, Texas will be hot, but it'll be nice. But definitely different from California. Yeah, because
Yeah.
it's not summer there. Growing up, we have the summer and the fall. Like
Yeah.
that's when our summer is in California.
Well, in California, they have bathrooms that are for like every gender can go in the
Yeah.
airport that I didn't know about.
Yeah.
And I went in one and I
California.
had no idea. I was like, I'm so sorry. And then of course, I'm like, oh, sorry, I'm from the South. We don't have those at
Yeah.
the airport. So
Yeah.
yeah, I'm
That's
expecting
so
that to
funny.
probably not happen in Texas.
Yeah, no, probably not. Not,
Yeah.
but that's
Uh-uh.
that's always a fun story. That's a good,
It,
interesting.
it was. It was a fun
Yeah.
event.
Yeah, that's so funny. Where did you fly into in California?
Into San Fran.
Okay, that's what I thought.
Yeah.
Like so when you're in San Francisco and you're flying and you're landing, you look up over those mountains, like right there to your left, I think was you're flying in. That's where I grew up. Like right
Oh,
there.
really?
Yep. I was really close to the airport. Like you could ride your bike to the airport, like that close.
You're a
Yeah.
Cali girl.
Yes, very, very, very. Yeah. Born and raised there. Yeah.
Blondie.
Yep. San Francisco. That's why I was laughing when you were like Scotts Valley. I was like, yep, it's cool. It's the weather's cold. People are like, oh, California's great, for the summer. And I'm like, not really. We wait until September or October and then it's warm. So
Yeah. But I mean, I thought it was perfect weather because it was like
yeah.
40s and then 70s during the day. So it was just like so comfortable.
Yeah. Yeah. You definitely need like a sweatshirt at night. Like,
Yeah.
yeah,
Yeah.
that's what
Which I
my
can get behind that. Like I like that. It still
yeah.
was like we got by the fire. It was cool.
Yeah, it is. It's a really fun. Yeah. I mean, it's a great area and San Francisco's fun.
Beautiful.
Yeah. And then up north.
Beaches with the cliffs all around it.
Yep. Yep. It's definitely, yeah. Did you get your picture? Every time I take somebody out there, because I'm local and I'm like, okay, let's go get your picture by the ocean. And I do
Yeah.
this with everyone. I make you go take a picture by the ocean and then you're freezing. And like,
Yes.
yes, but I have to get that picture like where you look actively freezing because I'm like, here's California. It's not like what
I'm going to
Baywatch.
send you the picture that we took
Yes,
because
send
it
it to
was
me.
like freezing cold. We all decided, oh yeah, let's go get in the water. We knew. I was like, I guess it's going to be cold, but I did not expect it to be that cold.
Yeah, it's
It
cold.
is not like North Carolina water.
Nope. No, I love the beaches here. Like,
Our beaches are like bath water.
yes.
That was like ice water.
Yep, it is. It definitely is. Yeah, because I remember always going to the beaches, but like never like they're so different. Like you enjoy the beaches here. I mean, they're beautiful there, and you enjoy them. You can surf and do all the things out there, but uh, like the it's just different. Like here, you
Uh-huh.
will really enjoy the beaches, and they're warm.
Everyone there was wrapped up.
Yep,
That
yep,
was on the beach. It wasn't like anybody was out there in their bathing suit getting in the
yep,
water.
yeah,
Here, it's like you're in your bathing suit in
yeah,
water
yeah.
because it's hot.
Yeah, not there. Not there. Not there. Yeah, definitely. And it's funny because like living where I lived, because I lived I don't know, like miles wise, not far, like maybe 11 miles from Stanford University too, because I mean you're kind of close, you're in Silicon Valley, but like going from Burlingame or like that's where you flew in because
Yeah.
that's where in San Mateo, that's where I grew up. And then like going to the city, which is only like 10 minutes, I don't know, maybe. The weather changes like by 10 or 15 degrees. It's cooler in the city.
Really?
Yeah, it's really
I didn't
cool.
notice that.
Yeah, it's cold. Yeah. If you were to get off like, the the plane and like stay in that area, you would notice that it was warmer than in the city. Yeah. Yeah.
I guess it's because it's closer in proximity to the ocean.
Yep.
You're
Yep.
getting that. Okay.
Definitely for
Oh,
sure. So
fun facts,
I was
folks.
from like there. I totally thought all this time I've known you, you didn't know that. That's so funny.
I knew that you were from California.
Yeah,
I just forgot that you were from exactly right there where I
right there.
went.
Yep, that's it. Yep, yep.
Beautiful.
Yeah, it's fun. Yep. You could ride your bike to these cliffs like and watch all the planes like fly off because when you're a kid,
That's cool.
probably not the safe of things.
Probably
Now
not.
the world's different, but you could still do it. That's how California
The
is.
world's different.
You can
Can't
still
do
do it
that.
now. You like that? I'm like, maybe not the safest now. You can't really go into San Francisco after dark now.
Well,
So,
yeah, that's true. One of
yes.
my friends found a needle literally in the couch in the hotel.
Oh,
Yep,
wow.
syringe. Yeah. We were
Oh,
like, changing hotels.
yeah. That's San
That was
Francisco.
in San Francisco, not Scotts Valley. So
Yeah. Yeah, that's crazy. It's
we were
crazy
moving.
though.
Yeah,
Well, okay, so let's hop in because I know you have to go. We'll talk forever.
we will.
Yeah, I know you've got another call soon, but let's jump right into DSCR loans. What exactly is a DSCR loan and why like, why is it such a good option?
Yeah, I mean, so it's a debt service coverage ratio, is what the DSCR
Hmm.
stands for,
Hmm.
which basically the gist of the product is
Yeah,
if you're an investor and
yeah.
you're buying a house,
Uh-huh.
and let's say you have either a large portfolio of properties or you're self employed, or maybe it's your first time purchasing an investment property,
Yeah.
you can use this loan. You can go in, make an offer on a property. You can put down usually about 25%, and we will give you a mortgage based on
Hmm.
not your income. We don't verify your income. We verify your credit, your assets. We base it on the rental income, the
Okay.
potential rental income
Yeah.
for the new property that you're purchasing. So
Okay.
if the rental income covers the monthly mortgage payment, then you're good. You close.
Okay. Excellent. Okay. Well, that's a really good way to describe it. Like I always tell people that exactly too. I was like, it's got to cover like the rent. Like it's just got to
Yeah.
make sense. But yeah, the way you describe that is great. Um, so why do you feel like that investors are flocking to these loans right now?
I mean, it's just an easy document
Mhm.
file, right? So all you have to do is supply an application with credit. You don't have to get into income. You don't have to get into all of your other properties, your
Yeah.
portfolio. It's like, here's my bank account. Here's where the money's coming from for the down payment. Here's my credit. I'm a gym. Let's go. And
Yeah.
then we order an appraisal. With the appraisal, that's where we have the rent assessment that comes back.
Okay.
And, if your payment's $1,000 and the rent's $1,000, you're done, you close. Typically around 25% down is about average for these.
Yeah.
For the rate to make sense. Interest rates on these are typically right now are in the sevens on a
Okay.
30-year fix. So
Oh, that's
it's
not
not
bad.
a bad interest rate. It's
No.
not a bad down payment, because even with investment properties, when you are documenting income, you
Yeah.
really do want to put down 25% on those as well for an ideal interest rate. So
Yeah, for sure.
just a great
So
loan.
who would qualify for a DSCR loan?
Basically, anyone who has I would say credit score, you would want it. They can go a little bit lower. So maybe
Okay.
like 660, but
Okay.
ideally 680, 700 and up, right?
Okay.
That's where you get into investor qualified.
Okay.
And then you need to have that 25% for the down payment
Okay.
and your closing costs. You need to have assets, some money in your savings account. You can
Okay.
be a new investor, so you don't have to have any prior experience
Yeah.
investing, but as long as you have the credit score and you have the money in the bank, you can use a DSCR loan.
Okay. So who wouldn't qualify for a DSCR loan?
I mean, someone with a really low credit score doesn't
That
have
makes
money in
sense.
the bank,
Okay.
obviously. Um, you know, I have done a DSCR loan on a farm.
Oh,
And so, I mean, It was difficult though, because we
Yeah.
actually had to get into renting out stalls and all these things. So it was very complex. Wouldn't recommend it.
Yeah.
So I mean, if you're buying a property that is in an area that is typically rented,
Hmm.
where you have some good rental comps,
Yeah.
that's going to be a good area. If it's in a $2 million house area where no one rents those out, that may not be ideal because we might not be able to find any comparables to actually find the rental payment that we could use to qualify. So, it depends on, what you're looking at, but something at the beach is always good. You can do condos,
Yeah.
duplexes, all the fun stuff.
Yeah, yeah. So typically now you mentioned what the interest rate is for like, right now for a DSCR loan. Um, typically how does it compare to like a regular conventional loan interest rate?
It's not really that different. I mean, I would
Okay.
say on average, maybe a half to 1% higher for a DSCR loan. With that 25% down payment, you really get a good bump down in the rate on both DSCR and your conventional loan. So I would say half a percent to one.
That's not
Not
bad.
bad.
No, not bad at all. So, do you feel like it's a smart time to use a DSCR loan on an investment property, or would you
I
tell
do.
people to wait? Yeah.
I would buy investment property all day long right now because I
Yeah.
feel like property prices are a little bit lower,
Yeah.
right? It's not as competitive out there.
Mhm.
So, for the first time in several years, you can actually get a reasonable deal on a
Yeah.
property. And we know that a lot of people may or may not be buying houses right now. So, if they're not, they're going to be renting. So, you have kind of some security there that, you're either going to be able to resell the property at some point or can rent it out and make
Yeah.
your money back there. So, it's really it's a nice time to invest.
Yeah. Yeah. I definitely think it is too. I'm finding more deals for investment properties right now compared to like a year ago or even two.
Yeah.
Yeah, definitely. So I agree with that completely. And I always think it's a great time to buy. So now we can so that kind of goes over a DSCR loan. What exactly is a bank statement loan? Because I know people ask me that all the time. And just for
It's
you know, you'll
it's a
explain
fun
it.
product. Okay.
Huh?
So this is for your self-employed borrowers, right?
Okay.
Self-employed, let's just say that you make really good money, you have good money, cash flow coming into your bank account.
Yeah.
But unfortunately, when you file your taxes, you have a lot of write-offs. And so your income ends up depleting down to where you may not qualify for a house.
Yeah.
What we do is we don't use your tax returns. We use 12 months of bank statements from your personal or your business account or both. We can use up to two accounts.
Yeah.
And we actually average out the deposits into that account. And that becomes your income for qualifying for the mortgage.
Oh, that's cool.
So it's magic.
Yeah.
We're not worried about taxable income. We're worried about what are you actually depositing into your account.
Okay. So with those kind of loans, you primarily is self-employed or do other people
Those are
benefit from?
self-employed.
Yeah.
Yeah. You
Okay.
need to be self-employed to qualify for a bank statement loan.
Okay.
Um, you cannot be a W-2 employee and qualify for a bank statement loan.
Okay.
Um, credit score, they they're generous, but with that generosity comes a higher rate.
Yeah.
So if you have a lower credit score, you may qualify, but the rate could be like nines and tens.
Oh, okay.
Um, if you have a relatively good credit score in the 700s, with bank statement 20, 25% down, you're probably going to be in that 7, 8 range.
Oh, okay. So it's not
And
bad.
this is, no, it's not bad at all. And that can be for a primary purchase, secondary home, investment property. So it's another really good tool for, especially for people who are self-employed that continue to think, I can't buy
Yeah.
because I'm not showing enough income. As
Yeah.
long as you've been self-employed, ideally for 2 years,
Okay.
I'm going to show that you have been self-employed for 2 years, and then we can use 12 months bank statements.
Very cool. Okay. Well, that's like a really good, I mean, I don't think the rate's that bad. I
It's
mean,
not.
because, I'm self-employed and I know it's difficult to get. Um,
It is. It is. It was like it was that product that we've needed for a long time.
Yeah. Yeah.
Since '07, we didn't really have a tool for the self-employed borrower. Like you
Yeah.
literally were just going to have to forego any write-offs and just show your straight income in order to qualify.
Yeah.
And now you can still file your taxes
Yeah.
and qualify for a mortgage. So it's
Yeah.
nice.
No, definitely. And I mean, I mean, it's super helpful because, when you're self-employed, gosh, it's hard. So,
I mean, and where you make up the difference is that, well, you're not paying as much in taxes on
yeah.
your income. So you might pay a little more on the interest rate, but it's worth it. It
Yeah.
all works out. The math works.
Yeah. Now, does your debt to income ratio affect you on a
It
statement?
can. Yeah, it
Okay.
can. It definitely can. It still comes into play. But I find that the average person doesn't run into too many issues
Mhm.
once we get into depository income and what they want to purchase.
Oh, okay. Okay. That makes sense. Okay. I was curious if the debt to income had any effect with the bank statement. And that doesn't have any effect with a DSCR loan either, or does it?
Debt to income, no, not with a DSCR loan.
Oh, okay. Okay. Well,
No
that's
debt to
good to
income,
know.
only with the bank statement loan.
Oh, okay. Okay. That's really good to know. And that's really helpful for buyers and, out there and even sellers that are thinking about buying
Yeah.
again, maybe some that are self-employed now. So definitely very cool. So what's the most creative way you've helped someone use one of these alternative loans?
The most creative? Oh
Yeah.
gosh, Karie.
I know. I figured I'd throw it out there.
I'm like, wait. I had some investors who owned a lot of larger rental beach houses
Yeah.
that they were building. So they'd owned the land. They needed to pay off construction loans with
Yeah.
these. And yet they were investors. So what made it really easy was that we could say, okay, let's do a DSCR loan. We
Mm.
went off of it. These were refinances
Oh,
where we
wow.
just paid off the construction loan and put it into a DSCR. We didn't have to document all that income. You could
Yeah.
still close it in the name of an LLC, which is nice. That's a nice little thing to be able to do when you're buying
Yeah.
an investment property.
Yeah.
And I mean, we were able to just close several of those. So
Wow.
that's a good little trick.
Yeah. No, I never would have thought of that doing that. So that's really cool.
Yeah.
That's really cool. Definitely cool. And that's something to think about. Now I'll have to think about that, when I run into investors or we're working on different projects. That's really cool.
Yeah.
I did think about what you had mentioned with a farm. That is so unique. But I was thinking about it. It was like if you had a horse farm, totally would make sense, you
I
know?
mean, because it was a rather expensive property,
Mhm.
but it had a lot to it. There was a lot of land, there was
Yeah.
stalls, things like that. So we did have to have a high level assessment for the rent
Yeah.
income. And we were able to make it work, but it was definitely a little more complex than the normal
Yeah,
property.
yeah, very cool. So what do you feel like is the biggest mistake you see people make when they're trying to qualify for one of these loans?
I mean, I guess probably just not knowing that they exist.
Hmm.
Like a lot of people just don't know that these are options. I think that's what we're
Yeah,
trying to do is just get the information out there.
exactly.
Your mortgage lender should be able to guide you through the process. I mean,
Yeah.
make sure that you have assets in your
Mhm.
bank account and they've been there for 60 days, no big, huge, large cash deposits.
Yeah.
Make sure your credit's clean. It's a big thing. I mean, if that's a lot, it gives you a lot of power if you keep your credit scores in that 700 range or
Yeah.
800s. We'll take it.
Yeah.
Um, so, I mean, credit score, assets, and just making sure that you're having a discussion with your real estate agent when you're looking at buying a property that is an
Yeah.
investment property. Is it actually going to cash flow? Right. I
Yeah.
mean, does it make sense? What is my payment going to be? And what is the rent? Which most
Yeah.
people, I think, probably do look at that. But we've had a couple that have come in and it's been really tight.
Yeah.
So it's something that you want to look at before you put down that due diligence money.
Yeah, for sure. And that's interesting that you were talking about having your realtor run the numbers. Literally before we got on this call, I had a client that was asking me, he sent me a house and he's like, this looked good. And it was a great house and it is priced really well. But looking at it for an investment property, I was like, ugh, it doesn't cash flow,
Yeah.
but it's like, I think that the average buyer or seller, because they're not in our world, looks, at that every day. And so it was
And
just something.
thanks,
Yeah.
that might work. Which when you're
Yeah.
thinking about like even for a condo or a townhome, you got to factor in taxes, insurance,
Yep.
HOA dues. What are you going to pay a management company?
Yep.
What piece of the pie are they going to take? Are you
Yeah.
going to pay? I mean, there's a lot more to it than people think. So it's not just here's my payment, here's the rent, and that's
Yep.
it. So
Yep. Definitely.
definitely seek assistance on those types of things. You help people with that. I help people with cash flow all the time, but you
Yeah.
guys are probably the best at it.
Oh, yeah. Yeah, we do run numbers a lot.
Yes.
We're kind of goofy like that. Like we just run them. And it's funny because we run into a lot of deals, but you'd be surprised how many just don't work financially. And I hate, like I closed on one today, hated letting it go. And it was an amazing house. And by me listing it, the seller did make a lot more money than if I could buy it. But what he wanted, it's all the numbers. And I hate it because I loved that house and it was in a great area and it was a good house. But it's all about the numbers, which
Somebody will grab that up though, and that could
they
probably
did.
be great primary residence for somebody.
Yeah, they did. Yeah, we listed it at 254. We closed at 280.
Oh,
So
nice.
yeah, he did well.
You did.
Yeah, he did well. And if I would have bought it, I offered 200 and he wanted 235. But when you're looking at like all the numbers, it didn't make sense. And I hated it. Like looking at the rent and like the rehab and so on. So yeah, I totally
Oh
get
yeah.
that. And it's a bummer. And that one makes me sad because I really wanted it. But that's okay. Somebody will enjoy it. The person
See,
that's
we're not only in the business, we actually do buy the properties. So we
yeah,
know
exactly.
what we are investors. We do buy
Yeah.
these things. So we look
Yeah.
at it all day long.
Yeah, people don't realize that. We're like, no, we look at it. It's like it was so funny. I had a bunch of people call me and they're like, asking me questions about that property. I'm like, if he would have taken that, do you think it would have been on the market? Like, I would have bought it. It was
Like
funny. Yeah.
we already thought of that.
Yeah, yeah, it was funny too because I had some buyers that like had called me like sign calls and stuff, and they were like, "So, I'm assuming you wouldn't take this or this, the 200 or whatever it was." I'm like, "No," and they're like, "You would have bought it, yeah, you never would have saw it." So,
Yeah.
yeah, but it's all about the numbers, which
Mhm.
just makes you sad sometimes when but it it has to make sense,
Yeah. It
for
does.
sure. For sure. So, do you feel like people are missing, like we talked about this before, but just to kind of reiterate it, because I feel like unless people are educated in these topics, I feel like it's not talked about a lot. Do you feel like people are really missing this opportunity to use a DSCR loan and a bank statement loan? Like, how many do you do compared to, traditional loans? I mean, I can't imagine a lot. Do you?
Well, because I know about the product,
Yeah.
when I'm
Yeah. I'm sure you
talking to
are.
clients, I
Yeah.
do actually have a lot of clients who end up qualifying
Mhm.
for this product as opposed to other products. And this actually
Yeah.
makes more sense for them.
Yeah.
So I mean, but it's still probably only a product that maybe is used 10-15% out of the total book of business.
Yeah.
And I mean, I think it could be a much bigger product if more people were out there and aware of it and knew like, look, I could buy an investment property. I've got the cash. I don't have
Yeah.
to show all this craziness. I've got the credit. I've got the cash. Let's go.
Yeah, yeah, definitely. And we try to educate, and this is why I was like so grateful that you came on today, because this is like one of our topics that we're compulsively trying to educate people like, hey, you can be an investor too. Let us help you.
Yes.
You can do this. This is easier than you think it is. And there's other loans. You don't have to save up all the money for the property, and maybe you don't want to. I mean, you
No,
really don't want to.
you
I
want to
mean,
put a loan on that. You need
yes,
cash
yeah.
invested.
Yeah,
Yeah.
yeah, definitely, definitely for sure. So if someone is denied for like a traditional mortgage, what are some questions they should be asking about these other loan options? I mean, would
I
they
would
work for them?
be immediately asking the lender if they
Uh-huh.
offer not this is called non-QM
Hmm.
mortgages. So you
Yeah.
want to immediately say, do you all offer these? Do you offer a DSCR loan? Do you offer a bank statement loan? Because not all lenders offer these. They're not necessarily going to be offered at banks. A lot of times it's going to be more like your correspondent lenders and things like that. So ask the questions. If it's a no, connect with your real estate agent and get the name of another lender and seek, additional approval, because there's other people out there that have other tools in their toolkit,
Yeah.
um,
Yeah.
other than just like your standard regular bank.
Yeah, yeah, I definitely agree with you on that completely. Just being in the business, just looking at all the different mortgage companies. I mean, there's some that are great for traditional, like I call it in the box loan, and then
Yeah,
there's some that will work outside the box. And it's important. I feel like selling real estate, knowing which companies do which, because you can match your client with them for sure. So I agree with you 100%
absolutely.
about that, and just like getting the education out there is so important.
Yeah.
So I think the one of the last questions, I know you've got to hop off soon, but we mentioned it kind of in the beginning. How long does this process typically take? Is it a lot different than, like a traditional 30 days,
It's
mortgage?
fast,
It's
30 days.
fast. Okay.
As
Is
long as you're working with your lender up front and you're getting everything. I mean, we're literally documenting. We get your 12 months bank statements up front and we confirm your income. So we know what your income is. So
yeah.
that piece is done. As long as your assets and your credit are clean, I mean, it's a very easy product as far as a bank statement loan. With the DSCR loan, that's another one. It's super easy. The one thing that we're always waiting on, we need that appraisal to come in.
Yeah.
That way we know that we've got what our value is for our rents, to make sure that we have our coverage. But outside of that, both of these kind of deals can be shut down in 2 or 3 weeks.
Wow. Okay. So they
Fast.
are a lot faster.
Yeah.
Yeah. I know I've done them. I just haven't paid attention to the time frame.
Yeah.
So
Yeah.
I
I
was
mean,
curious, you
some
know.
may say 30 days, but I mean, I feel like if we got the appraisal in, you can bust these through.
Yeah, yeah, definitely. Definitely. Yeah. Because yeah, I think you can, because I'm trying to remember some of them. I think, yeah, 3 weeks. I think that's what I typically
Yeah.
give everybody. But yeah, for sure. Well, I know you have to hop on another call, and I really, really appreciate all your time and chatting with us about DSCR loans and bank statement loans and all the fun things that, are so helpful for investors and self-employed folks, such as myself. So I appreciate it so much. And if you need any of Ashley's information, again, it's going to be below in the comments. You can always text or DM me, and I can get you directly in contact with Ashley, for sure. But I hope you have a great business trip, and
Thank you.
yeah, and you're recovering from San Francisco, because
I'm scarred now, Megan. It was fun.
no, San Francisco's crazy. It's always a fun time. You can go with me there, and I like love all those
Yes.
kind of fun things. Like
That's
I
what we have to do. Go to the secret spots.
Yeah, I do. I have all the secret spots. Yeah, yeah. Because anytime I take Chad there, I always take him to crazy places or make him experience stuff, and I just laugh because it's fun. 'Cause, I'm from there, so going to those kind of bathrooms. I haven't been there with the bathroom thing yet, but
It's in the
I do.
airport.
I love doing all the fun, unique California kind of things that people are not used to, like
Yeah.
standing freezing at the ocean.
Yeah.
Yeah.
That's beautiful.
Well, thank you so much. And I hope you have a good trip out to Texas. And
Thank you.
again, Ashley's information will be below in the comments. And thank you again, Ashley. And I hope you come on again and chat with us
Thank you.
soon.
Yes. Thanks for having me.
Thank you.
Take care.
Bye.